Hello guys, welcome to another market review. We're gonna kick off by looking at the coming week calendar. So I think the most relevant event is going to be CPI on Tuesday at 30:30. I think the dollar is going to be the main thing you wanna keep an eye on for the next week because it is all pointing towards a volatile week. So coming back to the charts, we have the dollar index, and in previous reviews I mentioned that I was viewing this as a breakout. The June monthly candle broke above this prior resistance, and I I think it's very hard to argue against that, honestly, even though this whole zone here looks like SR as well. I would take into consideration the fact that this has been a large range, a yearly range, 12 months of consolidation, and now we get a push higher. So it's hard to bet against this. And the current monthly candle is kind of small. When we take a look at the euro monthly candle, we'll see how we are expecting volatility next week and the remainder of the month. So we are holding this zone, and pretty much last 2 weeks have done nothing of interest on the dollar. We are below the monthly open, and we've retested this zone. And I was actually expecting this to maybe just be aggressive and keep trending higher. That would have been a real risk-off scenario. However, we're just holding this zone. So I would say this is neutral, really range bound price action. It doesn't really signal either bullishness or bearishness. This could, consolidate here and then keep pushing higher, or maybe it could roll over. I think the 100 level really is the pivot, and maybe a monthly close back inside that range would be, or weekly close inside this range would be uh, bad for the dollar. So coming back into the euro, I've marked this range, July high and July low, to show you one thing. The current monthly candle has only a range of 110 pips, and this is an anomaly because the smallest monthly candle that you will find around the previous years is around 180 pips, 190. That's really small monthly candle. It should be even higher than that. So even last week was only 70 pips when the average sits around 110, 120. And you might get 90 pip to 100 sometimes, and that's small, but average. It's nothing too crazy. So I think volatility is just setting up for the following week. That being said, I still think the euro is sort of trapped in this range, and shorting around here is kind of it doesn't offer a great risk to reward ratio. So I've been very vocal about the fact that I have my eyes on this zone for reloading EURUSD shorts, and that would mean that the dollar index should do something like this, right? It should dip into the zone, and the problem with the dollar right now, dollar longs, is that positioning is kind of um, concentrated on the long side, so it's very hard to it's getting to a point where trending to the upside is kind of difficult. So if dollar longs are crowded, a dip below the 100 level would get a lot of people exiting those dollar longs. And imagine if then price just did this. All those people are trapped, and now we're ready to trend. So that would line up well with this, something like this. Doesn't have to come all the way here and spend a lot of time. Maybe it's just a sharp move into the into the lower bound of the daily imbalance, and I think it's also perfect hourly imbalance. And those are some of my thoughts. Now, looking at the daily time frame on the euro, last week was a bit of a pain in the ass for trading because due to this very low volatility. And the Friday daily candle looks bearish. It's hard to argue against that. So what I'm thinking is that because we have CPI on Tuesday, it's trading on Monday is going to be you just know you're not going to get a big move on Monday because it's probably going to be another low volatility day. So because we have this daily candle that looks bearish in my opinion, and honestly I was kind of surprised that we couldn't after this hammer here we sort of traded into the lows and then made another low here, and we struggled to close above the weekly open. So there's been a lot of resistance on the euro on this zone, and with the latest daily candle it's hard to imagine that Monday is gonna trade and close above this zone. So what I'm expecting for Monday is that imagine we have a a new weekly open, and now I'm gonna go back, drop down to the hourly. I'm gonna call this weekly open, and oh, sorry about that. Yeah, there you go. So I'm imagining something like this. We open, maybe chop, reaches that monthly open, get back below, and yeah, I would be interested in selling something like this here with a stop at either this high or this high, but I would get out if we start closing above that weekly open. It's also weird because it's very obvious that this has been this was moving inside a channel, and we're now back inside it. So this breakout here led to nothing. Instead we just trade it back into the channel. So that's also one reason why I'm thinking every the Monday is very likely to be a down day for the euro. Also, the pound looks toppy on a daily, so I'm thinking short setups might do well on both of this. So I'll look for as always, last low pre-breaks, bearish engulfings, all sorts of things, and certain reactions from the weekly open to engage in those shorts on Monday. Come Tuesday, I will not be trading before the event happens, and if the CPI comes softer than expected, then yeah, I think we might get this scenario we might get this scenario where EURUSD shoots up into this zone. But if it comes hotter than expected, then maybe we sort of trade into the lower bound of the channel, and I'm still thinking that because dollar longs are crowded, this a move to downside on the Euro USD would really not have any fuel in it, and it would be very easy to reverse. That's why I'm still keeping this lower bound of the channel as a reference, and it would make me be interested in longs if we got a dip on Tuesday. Those have some triggers, but if you wanna keep it real simple, and I think Monday is gonna be bearish. Come Tuesday, whatever price does, you just have the weekly open as your pivot for the remainder of the week. So just imagine you get a dip, then we get this, another rejection, but then boom, we reclaim this, then you use that weekly open as your entry. Yeah, this is a very feasible move, really. And I'm also, keep in mind the fact that next week is very likely to be volatile because we've been really compressing, and we got CPI, so that's going to be really the fuse to the bomb. So those are my thoughts on the euro and the pound, very briefly. And gold is looking interesting to me because so when you look at the weekly, I've marked this 4K level because I think that's very likely to be a floor for the month. So I think if we get dips into this zone, they are for buying. Especially look at the daily reaction on the daily time frame to that below that zone. And here is where you probably get a lot of news. People saying gold trading below 4K last since November 2025, and this is just the perfect buying opportunity. So I just don't think that shorting gold here is intelligent. So any dips into the zone I think are for buying, and I think it's also smart this week to use that weekly open to engage in longs and look for high levels, especially if CPI comes softer than expected, because that would ease the rate hike expectations. So I think looking, I think 4.3K is a decent target for the week, really, if because I'm leaning bullish, gold and Euro USD. So that's gold, and yeah, I wanted to cover Euro New Zealand because the central bank hiked rates, so it looks like the start of a hiking cycle, and that's a very clear divergence compared to the ECB. Now, that being said, we identified this zone here, really key level of SR. On the H4, you can see that very clearly. Resistance turn into support, and we use that level to break even lower. So I still think New Zealand could move lower, possibly into this zone here. I would love to see a spike into this zone to sell it. Not too sure that will happen. However, what we can do is just, use that weekly open and see how price behaves around there. Um, you know, if we came into this level, I think very good opportunity for selling around here. But I'm not too sure. I'm not too sure. But last time I thought that it was not gonna pull back. It was somewhere around here, and that was a whole leg up. So never say never. But I think this is just likely to go lower. So that also leads me to New Zealand USD because it was the strongest performer last week against the USD. So this candle here was the moment where the news came out, where they hiked the rates officially, but then we retraced the whole move. But then, price started drifting higher and even reclaimed that yearly open. So I do think that yearly open is a key level now, and you really don't want to see acceptance below that yearly open, because then that would very much likely signal that New Zealand is gonna um, undo all this move. This kind of looks like a head and shoulders, but not quite. So I'm not paying attention to that. I'm more interested in watching how price behaves around the yearly open, especially this low. This low seems interesting because we could also maybe swipe this and with a fast move and then reclaim. I think that's a very good trigger for long if we get that. But yeah, that's pretty much it for New Zealand. US oil. I think I did a review on Monday, and I said that this was going to go higher. We didn't get a retest just like I wanted of this key daily high. Instead, we got this rejection on Monday. But Tuesday, boom, you have the move. So if you got in, well played. If you didn't, then let's go for the next one. So now it's just retracing this whole move, and honestly, I don't see a play here that I would be interested in getting involved in, unless we talk about retracing all this coming into this zone. Here I think longs are interesting just for dead cat bounce. I'm not expecting a new war or the war to resume to happen. If we do something like this, it would be just a small bounce, and then who knows. Also think this zone here looks important to me. So if we don't get all this and price that's holding above here, then maybe longs are in. I would be interested in long it, but not as much as I was down here really. But just mapping out different scenarios. EURGBP is very interesting because it's very close to its key swing low here. So I'm just watching for an SFP of this zone. That would get me interested in longs for the EURUSD, and that would also mean that if I have to short one, GBP would be something that I would much rather short than the euro. The S&P is also looking pretty good. I thought the review, I think at the review I said that this was a breakout. We pulled back a bit, but Friday made new highs, new weekly highs, and I think this is pretty much on the move to take out this high, and I think it's gonna reach, you know, somewhere like this. So that tells me the risk appetite is just there. You know, the moving averages were compressing here, so that was also one of the things that were pointing towards a breakout. So, you know, with risk sentiment in positive risk sentiment, I just think, you know, dollar and oil are just likely to get sold next week. But, you know, we'll have to see how CPI comes out. USD CAD is also one that's kind of interesting. I have this sort of support zone here. It does look like it wants to roll over, at least towards here. And yeah, I also wanted to cover Bitcoin. And here I think the moving averages are gonna come in handy. I said that for July, I thought that the bullish side was the only one that made sense to me. Shorting around here made no fucking sense. Last week we didn't do pretty much anything significant in terms of price action. Looking at the moving averages, we found a little bit of support at the 100 EMA, and initially we found resistance at the 200 EMA. Now we are finding support there. So that combined with the S&P breaking out, and we also have the CPI data coming out, I think there's going to be positive risk sentiment, and I'm looking forward to Bitcoin trading 67k into this previous high, quite possibly taking that out. And you know, for the remainder of the month, I do think that Bitcoin could trade into 70k, 71k, which is just about the mid of the range. And you know, this whole inefficient move is likely to get filled, so that also fuels up my bullish bias on Bitcoin. And yeah, that was everything. So thank you for watching, and we'll make money next week. See you guys.